who wants to take capital or investments from people to trade for them has to, as a matter of fact, as a matter of urgency, put down a contract with such a person. The need for contract cannot be overemphasized.
Good day, traders. It's Forex Evangelist right here, and welcome to our first episode of Inside the Mind of a Trader. So today we have a special guest. This series in our YouTube channel is going to be interesting. We are going to be learning a lot. Okay, we are going to be unpacking a lot of knowledge that is going to help you in the financial life, in trading, either as a forex trader, commodity trader, or stock trader, anything. Okay. So today we have a special guest, and he's a lawyer and also in the finance industry. So let me not say much about him and allow him to introduce himself. So Barrister, welcome.
Thank you very much. Okay, so my name is Collins Akpusi, and like you said, I'm a lawyer, and I also have a degree in business administration. I'm excited to be here. Thank you very much.
Okay, Barrister, can you just tell us your experience about trading? Maybe how many years you've been trading and how it has been so far?
Okay, so basically I started trading, or I should say I started learning to trade sometime in 2020. That was when COVID hit, and we had a lot of time in our hands. I decided to use that time to start learning the act of trading. And I think I remember the date precisely, 26th of April 2020, because it was a very good friend's birthday. So I remember that day very well. We were out celebrating, and then I had the opportunity to learn Forex, and we started learning immediately.
Wow.
On the party ground. So it was quite an experience, and ever since then I had this passion for trading, because it was clear that we needed some sort of alternative sort of income. And trading Forex was a beautiful, in fact, I cannot think of a better way. And ever since then I've been trading. Yes, thank you.
That brings us to the topic of discussion today. As a lawyer, somebody who is in the legal profession, some retail traders out there, let me use retail traders, because I know most of our viewers are not hedge fund traders. They obviously know what we are about to talk about. So it's all about how traders can protect themselves, because when a trader feels like, okay, now he's profitable and capital is his problem, most of them make that mistake of, maybe I have a relative who I can take money from, I have a friend, okay, there is this person who say, okay, since you can trade, I've seen your statistics, okay, let me give you money so you trade, because I've been a victim of such. So one advice before we go deep, what's your view on this first?
Really, the word that comes to mind as a lawyer right now is contract. It is very fundamental that any trader who wants to take money, who wants to take capital or investments from people to trade for them, has to, as a matter of fact, as a matter of urgency, put down a contract with such a person. The need for contract cannot be overemphasized. Okay, and because our viewers may not be very conversant with the term contract, I'll give you a quick definition. A contract is simply an agreement between parties, and by parties I mean the trader in this instance and the investor. Okay, so basically the terms and conditions, or the requirements, or the risks and obligations that should emanate from that trading exercise should be well defined and penned down. That way people understand each other. That way the term fraud will not come in. Of course, you know that in our world today, the word scam is prevalent. If you are young and you have a laptop, there's a presumption in your favor that you're a scammer.
Especially here in Nigeria.
Exactly. So it's easy to get rid of the fraud. It's easy to clear the mind of the trader if there is a contract, if there's a mutual agreement binding both parties, both the trader and the investor. That way the trader can trade freely without having Ordinarily, there are too many things jostling for attention in the mind of a trader.
Yeah.
Ordinarily, a trader is thinking about lot sizes, market situations, and all that. And then he has to worry again about the money he has been given to trade with.
And some fantasies in his head.
Exactly. And so if you put down a contract and then the parties understand each other, then the trader can go into trading without having to worry that the market may go wrong. Because in the contract, he has explained this to the investors that look, the market is a volatile place.
Yeah.
Okay, and if the trader does not have to worry about losing the money and then the trader coming after him, or sorry, the investor coming after him, then he can trade with a freer mind.
Yeah.
Okay, that's one. Then if the contract is in place, okay, the investor will also understand that this is no longer about just the trader.
Yeah.
That the trader is a legitimate business person who is only trying to make both of them money.
Yeah.
So in the event that it doesn't work out, I mean, that's the market.
Yeah.
You cannot blame the trader.
Yeah.
These things are well understood before the trading exercise starts or before the investment takes place. Okay, so basically that is it. In the absence of that, then there is the chance that the trader will be labeled a scam.
Yeah.
The trader may even be arrested. I've seen that happen.
Yeah.
I know a trader who's in the prison right now. And I will say it's not his fault because he actually invested the money in a trading account and then of course the money blew.
Yeah.
Okay? The investors has labeled him a scammer, arrested him and is in prison right now. Although he has gone for his bail and he has gotten bail.
Wow.
But the point is, the investor has lost some money obviously, but the trader has lost money, he has lost reputation, and his psychology has messed up.
Yeah.
He has a messed up psychology. Okay? But this is something that a simple contract would have handled.
Yeah.
I would advise a young trader who is going into investments with people to get a lawyer really.
Yeah.
Because in the absence of a lawyer, you may find it difficult to put together an ironclad agreement or contract that will bind and take away some of this. It will give you a leverage, so to say, to give you that ease of mind. And of course, the investor will also understand what you're doing with their money.
Yeah.
And of course, they will see it. The contract will be well elaborate.
Yes.
And then the trader will have what I'll call a free mind. Basically, trade.
Yeah.
That is it.
Okay. I know our viewers will be enjoying this. Please don't forget to click the like button, share, subscribe, share this video to other traders because many traders are in this situation. Maybe they are not already in this situation, but they are about to. Okay. Remember the theme of this series, inside the mind of the trader. So I believe we are inside the mind of traders out there. Okay, Barrister, let's talk about the second thing, which is important, clause. Okay, let me take for instance, two clauses that can be in an agreement. Most traders would be like, okay, monthly returns. Which personally, let me not just want to give my own opinion about that. I don't think it's the best.
Thank you very much for that. I will quickly start this response with the concept of a consensus ad idem, which simply means a meeting of the minds.
Yeah.
Okay. It is very important that the trader and the investor understand each other. Okay. You may not like the idea of a monthly payouts from the trader to the investor. I will not say I have anything against that. I'm not sure it's the best. It may be, it may not be.
Yeah.
But the point I'm trying to make is that if the trader and the investor understand each other, such that in the event that the money in the trading account blows, the investor understands. Okay? However, they may also have the agreement when the investor says, okay, fine, I understand the market is a volatile place. It can go up, it can go down. I mean, nobody has control over the market. Okay, fine. How about we take a 3 months time to review our progress? Okay? Okay, how about setting up things like lot sizes? I don't want to go technical here, but things like risk. Manage risk. That is to say, in the agreement, okay, we stipulate our risk regime. Wherein the investor understands, or the trader also understands, that he is not allowed to trade beyond this risk. These things may be captured in the agreement. The point is, when the investor and the trader have proper understanding of what they are doing, then the idea of it will take a lot of tension away from the trading, the whole business plan, the whole investment strategy. Okay, but when you have given out your money as an investor to a trader, and the trader is under obligation to deliver, that builds some sort of tension in the mind of the trader. These things are micro, you may not see them. Okay, but in the psychology of the trader, he's always on the edge, always running after things. Many things are pursuing him. He's running to meet up. Perhaps it's 15th of the month and he has not made anything. And then he has 15 days to deliver so amount of money, and then he's under pressure to deliver. Okay, but this agreement I'm talking about now, or whatever clauses they put in the agreement, may take away some of this pressure. Okay. Now, the consensus added I mentioned earlier, the meeting of the mind, the oneness of purpose that should come from the investor and the trader will be communicated to whoever is going to write the agreement, such that is the lawyer now, such that he communicates the minds of the trader and the investor in the agreement. Why this is so important, I cannot overemphasize. Because it's so important that when they get it right, then the trader can easily trade freely, and then the investor will expect realistically without having high hopes. Or what we usually call hoping against hope. You are putting your hope on hope. I mean, that is ridiculous. And a lot of people come to expect that from trading. When you mention Forex, a lot of people think it's a get rich quick thing. It's not really. But you can only ensure that these things are well understood in a proper written agreement. Preferably by a lawyer. Any lawyer of your choice. Provided that these things are well captured, so that both the trader and the investor understands what is possible. And then within the parameters of those possibilities, they can expect. I think that's the best way. That way, I mean, the parties do not have to over-expect. And of course, the trader does not have to over-promise. Okay, and if you allow me, I think I will give investors this general advice, free of charge, obviously.
Thank you very much.
That
please like this video and subscribe. I know you guys are enjoying this.
You need to understand that traders are not magicians. Of course, they can overpromise, but it is always better to expect what is real. In other words, traders also needs to promise what is within their means to provide. Thank you very much.
Thank you very much for that, Barrister. Okay, so thank you very much, Barrister, for that point. That was very crucial. Okay, so guys, this video is sponsored by Hantec Markets, a reputable forex broker with 30 years of experience, more than 30 years of experience. So if you are looking for a good broker out there to trade with, click the link below in the description, to register, create an account, and trade. Okay, they have fast withdrawal, fast deposits. They have tier 1 regulation in almost all continents of the world. So that's a very nice broker out there. So thank you very much. Barrister, let's talk about prop firms. Okay, let's just talk a bit about prop firms, because this is another option that retail traders have. Okay, and putting in consideration what is happening around the prop firm industry, a lot of scams. Okay, so do you think it's an alternative for a trader who wants to manage big equity? Because obviously, why traders look for an investor is big equity. Because a trader can easily, in as much as $100 may be much, for a youth here in Africa or Nigeria. But do you think prop firms can be sort of a solution to that, instead of going to, disturb yourself writing agreement with an investor? So do you think it's an option?
Okay, thank you very much for that. I don't think there's any difference between what we have been talking about and prop firms. The only difference now is that the agreement that we've been referring to in the case of prop firm has become digitalized. Because you mentioned the scam that is prevalent these days in prop firms, and I will attribute that to a situation where traders have not taken the time to do their due diligence to find out how legally established these prop firms are. So when the traders have not taken time to find out the regulations that these prop firms have and how strong those regulations can take care of legality with regards to what the prop firms are promising, then you have a failure in contract. Okay, so it's the same thing really. Okay, so because if you're dealing with somebody you're looking at face to face, then you can talk about putting down a contract. But you're looking at a prop firm that is based somewhere in Mauritius, or somewhere in US, or somewhere in faraway countries or continents all over the world. So if you don't take your time to establish a proper regulation, with these prop firms, then you run the risk of trading with a phantom body that does not even exist. Or perhaps exists in somebody's backyard, and you think you are dealing with a reputable prop firm. So in the absence of that, then you're looking at an absence of contract. Okay, except in this case, it is digital. In a click of a few buttons and then paying your enrollment fee, you start trading $5,000. Where is the guarantee that $5,000 actually exists? Okay, so doing your due diligence to ensure that reputable regulations apply to that prop firm, that is the contract. Okay, that applies almost as much as the contract that we know.
So I think we should speak more or talk more about regulation in the prop firm industry, because this is something that can obviously, help traders. Because I know it's already helping traders, but the motive behind the creation of these prop firms most times is not in the interest of traders, but it's such a fantastic innovation, to help traders, scale up their capital and obviously become financially free when they have the knowledge. Okay. So but let's talk about traders in general now, and trading. Let's say, if you can give yourself an advice, as a beginner, with your experiences, what could that be? Like something you are doing now or you did that you say, how I wish, I knew this would have happened, I should have done this, I should have, do this one. So what do you think that could be?
Really, that's an interesting one, and it brings back a lot of memories. Okay, I remember when I started trading, the first thing I told myself is that you don't know this thing. One of my mentors will always say that you should assume the position of I know not. The moment you start thinking that you know, that is when you start making mistakes. When I went to driving school, one of my instructors told me that the moment you think you have learned how to drive, that is when you have your first crash. Okay? Because your confidence will be false. Keep learning, and be meticulous about following instructions. The trading industry, or should I say the trading platforms, are actually very simple. But the human mind make it complex, because we come to trading with a lot of baggage. Perhaps you have learned one or two things, support and resistance, and then you are calling a support, because in your mind it's support. Okay? But if you actually listen to your mentors, you will know that no support is actually support until it is support.
Of course.
I don't want to sound like I'm rhyming.
That's correct.
But you need to follow instructions. That's what I would encourage every trader out there to do. Follow instructions.
Okay.
Of course, you can try out things, but it's always better to work within the parameters of the instructions you have been given, so that with time you can build confidence. Okay, and also trade with the minimum lot sizes. Okay, I mean, if you are venturing out with a $100 account or $50 account, and then you want to start doing ridiculous lot sizes, or like you rightly call it, Lamborghini lot sizes. You have already picked out your dream car in your head, and you want that trade to buy that car. That is very wrong. Some of us did some of those things in the past. I was lucky not to blow accounts. I was very lucky. I will call that luck, because nothing scientific about it. We're just gambling in the market, and these are things that are very dangerous, especially when you are trading small accounts. But then, if you pick up naughty skills along your way, what I would now call character, it has built into your character, then it will be difficult to adjust, even when you are trading big accounts like prop firm accounts. Of course, the prop firms will give you drawdowns, both daily and monthly drawdowns. It will be difficult for you to make those drawdowns because you are over leveraging, because you are impulsive, because you are not following your strategy. So these are very serious things that we as traders need to, coming up traders or upcoming traders needs to look into and stick to. Thank you very much.
So thank you very much for that response, Barrister. So the next question is like a general question in trading as well. But I hope I'm not deviating so much. But at least our listeners, they really need this, to accompany with the information of signing an agreement and investor. So what do you think a trader needs before he can go into agreement with an investor? Is it that he needs a complete sound knowledge, or he feels he doesn't need the knowledge, his problem is money? Because most traders out there think their problem is money, their problem is capital. I used to have that notion before, during my early days of trading. I would be like, my problem is money. Give me money, let me trade. And even if they give me $1 million, believe you me, you are going to blow that money, within a day. So what do you think traders should focus more, capital or knowledge?
That's a very interesting one. I say that because I found myself in that category a while ago. The truth is, it's a very simple answer. The knowledge is the first thing. Okay. This mentor of mine I keep referring to, he taught me something very vital. He said, you learn, okay, and then you remove the L, and then you end. Okay. So now that principle is simple. If you have not learned, then you'll be applying all the wrong knowledge. You'll be impulsive, you'll be doing the wrong things. So you can't earn. Okay, so it doesn't really matter how much money you have. Then I also use this opportunity to talk about tracking trades. That's keeping a trade journal. If you keep a trade journal with a $10 account, and you have been able to move that $10 account, okay, maybe $10 account is ridiculous. Maybe we should talk about a $100 account, okay? So a $100 account can give you reasonable lot sizing, and you can take multiple trades, okay? It gives you a little bit room to trade. Now, if you can move your $100 account to $110, okay, you have done 10% of that account. If you have a $1 million account and you move it, you know how you moved your $100 account to $110, you can replicate it with a $1 million account. Your trade journal will say the same thing, because it is the same thing. The only thing that changes is lot size.
Of course.
Everything remains the same. The parameters with which you enter trades are the same. Your strategy is the same. Your stop losses will now change because your money has changed. If you are risking $5 per trade, okay, and you have $100 in your account, if you have $100,000, you can do $50 per trade. Imagine doing $50 stop loss.
I think that's less.
Okay, if you can do $50 stop loss,
if you have your $100,000, $500, I think.
Okay, the point is you have risked properly.
Yes.
Commensurate with your account size.
Well, I think maybe you are talking based on the trader psychology, because so many people, or let me say, so many traders, they focus on figures instead of percentage. Maybe you are talking on the aspect of figures.
Okay.
Traders focus more on figures. You understand? So the event will be like, if he's losing $500 out of $100,000, you'll be like, man. You will not calculate based on our exchange rate. You'll be like, this is close to $1 million.
Yes.
You understand? So they are focusing more on figures. But if you check in percentage, you've not actually done much.
I think you're very correct, because I think, okay, you've put it better.
Yeah.
I was actually talking about percentages, but I was using figures.
Okay.
That's what I meant by moving your $100 account to $110. That's 10% increase in your account.
Yeah.
And then if you are risking, ideally one should risk not more than 3% of your account.
Yeah.
In my opinion, or what I do most of the time, is I am a very conservative trader.
Yeah.
I risk only 1% of my capital.
Okay.
That way I am relaxed.
Yes.
It is very important. I've mentioned it when I talked about contract. It's very, very important that the trader has a free mind.
Yes.
A free-minded trader that is not pressured, that is not under pressure, is always better than a trader who sees more in the market. Because if your mind is free, then you can always take rational decisions in the market.
Yeah.
Okay, so really you are correct. Reason in percentages. take proper risk commensurate with your account size, and over time you will find yourself making progress irrespective of your account size. So if you are trading $100 account and you are making 2-3%, 10%, as the case may be, if you are trading a $1 million account, you will do the same thing.
Okay, so thank you very much, Barrister, for your response. So the next question is this: what do you think are the characteristics a profitable trader possess? Because within yourself, these are certain things you should have, not just strategy. Let's talk more about even routine, daily routine. A trader's life. What do you think a trader should possess? Because these are certain things that will make you a profitable. Because somebody who is an abusive marriage, obviously, I don't believe can be a profitable trader, because trading is more of a psychology game. Okay, so what do you think a profitable trader should possess, both in character, in knowledge, and otherwise?
I think you have used one word to explain it all: psychology. It's very difficult to find a trader who is chaotic in his personal life, is doing well in trading. He does not tally. He does not match. Okay? So the first thing a trader needs is a peaceful mind. In my opinion, anyway. It's a very peaceful mind, a relaxed mind. Anytime you have crisis of conscience, anytime you have panic in your life, in any aspect of your life really, that is not the best time for you to trade.
Yeah.
More often than not, you mess up trades when your mind is messed up.
Yeah,
but when your mind is at peace, when you have a level-headed mind, you see things clearly. Okay, most times these things are very simple. In fact, my first encounter with Forex was really shocking. Shocking in the sense that I couldn't believe that it was that simple. Okay? But then, the moment I thought that, I made my first mistake. Because yes, it's simple, but it's not easy.
Yeah.
Or you can say it is easy, but it's not simple. Whichever way you want to put it.
Yeah.
You look at it. Okay, a lot of people find it difficult to speak English, but they can recite ABCD very well. Okay, so what's the problem? The problem is putting those A and B and C together to form words.
Yeah.
And to put them into sentences and all that. So really, Forex trading is that simple. It's simple. I mean, it's simple. In fact, the options are very simple. It either goes up or it goes down. It's simple. When you have a clear mind, you begin to see that this bullish engulfing is not in an area of value. Therefore, it's not a signal. But when your mind is clustered with a lot of interest, with a lot of distractions, then you begin to see a doji in a simple candlestick that has not even closed.
Yeah.
And then by the time it closes, it's no longer a doji.
Yeah.
And you're like, what was I thinking? We're not thinking.
Yeah.
That's the problem. So I think a trader needs the psychology of a peaceful mind that will give you the requisite disposition to actually see what is in the market and not make up your own ideas and impose it on the market. And of course, the market will ignore it.
Trading your feelings.
Exactly. Exactly. And then the market will just ignore you and do what it will do. But if you are peaceful, you can easily spot what the market is doing. And then when the big boys take their move, you follow them. And then you make money.
Yeah.
Okay. And always, if you ask me, I will say that taking it a step at a time is very, very crucial. If you want to, use excitement to trade, I have done that. I speak from experience. I have done that a lot. I have made some good money in Forex and I've lost them. Because the moment you are excited, that's not the right time to trade. You need a peaceful mind. If you are worried and angry, that's not the time to trade. Okay, you need a peaceful mind, a disinterested mind, so they can see things for what they are.
That's true.
And then take easy-going trades, and then make your little profits, and then build your account gradually. But if you watch one YouTube video and you think you have arrived, and then you want to go and replicate, you mess up the whole thing. But when you take your strategy step by step, gradually, with a free, consistent mind, definitely you will be profitable. Definitely. I think that's what has helped me over the years. When I make mistakes, I quickly learn from those mistakes. Take a step back, because you cannot move on your own pace and expect the market to follow you. No, it is you that is supposed to follow the market to where it is going to. Okay, if you move ahead of the market will leave you behind.
Yeah, that's true.
Okay, so I think it all boils down to the psychology of the trader. Okay, and then every other thing will fall in place, basically.
So thank you very much for that point, Barrister.
You're welcome.
Okay, before we round up, you know you're a working class somebody, in as much as you're a trader, and you are combining the both, right? If I may ask, because this is something other traders can actually learn from. I'm going to ask you two questions, but before I ask the second one, can you give us a hint of what your own personal routine is like? How do you, combine trading, with your profession?
And if I'm going to be honest, I will have to tell you that it is quite difficult to combine trading with your regular, especially the life of a lawyer that spends almost all his time in court.
Yeah, lawyers out there, drop a comment.
Okay. But what has helped me over the years, is that I got a wristwatch that beeps every 1 hour.
Wow.
Okay, and I worked on my strategy, to sync with the hourly chart. Okay, so when that watch beeps, I quickly peep into my chart and see what the market is saying. But before then, I have set up my chart. I know what I'm looking for.
Yeah.
Okay, so whenever it's an hour, I go into the charts. Of course, I have my laptop with me. I have my phones with me. So even if I'm in court, I can easily look at the market and see if my parameters have been set up.
Yeah.
And the moment I look at them and it's not there, I shut down. That is not the time to begin to twerk and shift ground and reimagine things. First of all, I'm tensed up in court. I'm considering alternatives in my case and things like that. So I don't have the presence of mind, the psychology, the proper mindset to begin to look at alternatives in the market. I don't. So what I do is, maybe over the weekend or before I go to court in the morning, I set up, the chart the way I want it to look like. If I'm looking for a long position, I've drawn my support and resistance. I have my trend lines and what have you. I know the candlestick patterns I trade. If they are not there, I cannot in the middle of my day begin to look for them. I cannot devise a strategy in the middle of my court proceeding. No.
Yeah.
So when I open my laptop or my phone to look at my chart in the middle of the day, and perhaps maybe in the courtroom, my case is like the next case that will be called. That is not the time to begin to look for trade or to begin. So, and sometimes if I've entered the trade, all I need to do is to be watching if I can break even yet. Okay, so if the trade moves in my direction and then it has given a retracement, I can easily move the stop loss to, in the courtroom obviously, move my stop loss to a break-even point. Where I can now relax and go on with my day, and then I can easily come back and look at my chart and smile.
I'll continue.
And
my lord, may I?
Exactly. And of course, if the trade is in negative, really, because that happens too, because I have risked properly, perhaps I have risked $2 or $3. I am not worried. I just move on with my day. Really, I don't shift my stop loss in either direction. I just let things play out. And if peradventure, when I come back to the chart, I'm in profit, wonderful. If the trade has hit my stop loss, which means I've lost some money, that's still okay. I mean, I've understood the idea of risk because I risked properly. Very important. In fact, I should have mentioned that when I was talking about what a trader should do. Okay, if you risk properly, then you can relax. Really, you can trade with a peaceful mind. But if you, for instance, if you have a $100 account and your risk is $20, you won't sleep. You won't concentrate. You'll be checking your charts every now and then because you are worried. But if your risk is $2, whichever way the trade goes, you're okay.
Wow.
Okay, so no one trade should make or mar a trader. You build it gradually. Thank you very much.
Thank you very much, Barrister. So I believe you guys are enjoying this session, and we are going to invite you again, Barrister, because I know these guys are enjoying it.
That's okay. That's okay.
So but before we round up, so can you give us any final remark, like an advice you are going to give to the traders out there, just in general, based on everything we have said, in this session? So can you just give the traders advice?
Okay. Thank you very much.
Can
for
be a
that.
legal one, you know.
Well-
if the lawyers out there will not come for me, I'm sorry.
Well, okay. Legally speaking, I think every trader out there, especially those who want to take money from people,
Yeah.
should please get a lawyer. It is not advisable to venture into things like that without getting proper legal advice and proper contract that will secure your position as a trader. So that when things go wrong, nobody will come and say you scammed him. Okay? I know that, you know that.
Yeah.
They don't know that.
Yeah.
Okay, but when there is a properly written down agreement
Yeah.
wherein all parties know their rights and obligations,
Yeah.
the risks are well explained,
Yeah.
and then you go into the business, then nobody is worried. Even if the money is gone, it's part of business. People shipping containers from abroad and the thing doesn't get to Nigeria.
Yeah.
I know people who have shipped in vehicles from abroad and either it's disappeared on the road or maybe custom confiscates it or things like that. I mean,
Yeah.
things happen in business. There are frustrations.
Yeah.
So, but where there is no proper agreement and you go into these things, there is a good chance that you can easily be termed a scammer.
Yeah.
And even though you know you're not a scammer, how do you explain that? You will explain that you have no evidence.
Evidence?
And then on the trading part of it, I think that traders need to take things slowly.
Yeah.
A lot of traders are in the fast track. They want to make money today. They are putting their house rent on that trade they are entering.
Yeah.
They want to buy their dream car in one trade.
Lambo.
That is not the proper way.
Yeah.
Okay, the what I've learned over time is that you take your trading one step at a time. Be consistent. Track your trades. Okay, use trade journals, preferably electronic ones,
Yeah.
so that it's automated.
Yeah.
Then over time, look at your equity curve and see if you are making progress. If you are not, look at what you're doing wrong. If you're not doing anything wrong, then keep at it. Maybe you're just going through a phase, after which you become profitable. Just take it slowly. You know, take the trades. Let your risk be commensurate with your account size. That way you are relaxed
Yeah.
and you have a peaceful mind. And something tells me that anybody who does all this will make money in trading.
Yeah.
Like I said earlier, I have not lost. If I have invested $500 in trading, I have gotten at least $1,000.
Wow.
And that is strange because everybody I know that has been trading, of course, not at a professional level, at our own level of trading,
Yeah.
has blown accounts. Okay, so if I am saying that I have not blown accounts, that's a kudos.
Of course.
So, and I believe I have the authority to say that if you take it a step at a time, definitely you will make money.
Yeah, because the goal
Definitely.
is always to stay in the game.
Yes. The longer you stay in the game, the better chances you have of winning.
Yes.
Okay? Imagine if you are watching a football match and then it's 2-1 and then there's 10 minutes added time. There's a good chance the game will not end 2-1
Yeah.
because there's more chances. There's more time. Exactly. Okay, so really, if you keep at it and you do the needful and you put yourself within the parameters of your strategy,
Yeah.
there's a good chance you make money.
Yeah.
And there's something I learned early enough in trading that you only need 40% with a proper risk management and money management. You need just 40% to break even to make money in trading, which means you don't really need to kill yourself in the trading. You don't need to win all the trades. All you need to do is to stay long in the game, take it gradually, and you make money. So, I mean, that's exactly it.
Wow.
Thank you very much.
Thank you very much, Barrister. That's the end of this show, and we're going to see you guys in the next episode of Into the Mind of a Trader. Guys, don't forget to like, share the video, subscribe, and click the bell icon if you are a new subscriber. And see you in our next episode of Into the Mind of a Trader. It's Forex Academy right here. Bye for now.